Thank you, everybody, for joining. My name is Fred Hsu, co-founder and CEO of D3. Today, I'm very excited to have our special guest, Arthur Hayes. How many of you guys read Arthur's blog? Super excited. As part of Satoshi's Funhouse. So, quick intro. So, we have Arthur Hayes, co-founder of BitMex and also founder of Maelstrom and as chief investment officer. Everybody give Arthur another round of applause before I jump into the questions. All right, so Arthur, number one question I have for you is what drives your passion for Bitcoin and how does your current experience shape your current market outlook?
Passion for Bitcoin. So I really align philosophically with what was in the white paper, especially the first time I read it. I was a bit of a gold bug back in 2013 when I first read the white paper, and I think decentralization, and we're finding out how much it actually means when you think about AI, big tech, and all sorts of other government agencies that control information and force feed us stuff. I think the mission of decentralization and open source is needed even more today than it was back in 2008 and 2009 when the first inklings of Bitcoin were created.
That's super helpful. Number one question I have from you from the list here is the $250,000 Bitcoin question. In your BBC Substack post on April 1st, 2025, you predicted that Bitcoin hitting 250K by year end if the Fed pivots to QE. What do you think what signals confirm this thesis and what could possibly derail it?
So obviously I think the person to listen to is not Jerome Powell, it's Treasury Secretary Scott Bessent, and he's the chief salesman for all the shitty bonds that he's got to sell on behalf of his boss, Donald Trump. And so he's going to go out there and sell the bonds. And if you're not buying the bonds, then he's going to find a way to print the money. And he's been very clear about the ways in which that his department can do that. He talked to us about Treasury buybacks right after Liberation Day when the markets were in meltdown mode. He's gone on recently talking about the ending of the conservatorship for Fannie and Freddie in the United States. And some financial analysts believe that could inject over $5 trillion of liquidity into the markets if those organizations were allowed to lever up their balance sheets like they were pre-2008. And he's also talked at length about the exemption of the supplemental leverage ratio, so allowing the U.S. banks to buy Treasury securities with infinite leverage. And in his words, he says sometime this summer he expects that rule to be, that exemption to happen. So I think all these things are happening in the background, and at least when you think about the Fed, obviously they've held interest rates constant, people looking for quantitative easing. But if you really look through what their portfolio has been doing, the Fed has actually been buying Treasury bonds of 10 years or longer in maturity. So they're actually doing stealth QE for the part of the bond market that nobody wants to own for obvious reasons. You don't want to own 10-year, 20-year, 30-year bonds because of inflation and whatnot. You're okay to own a one-year Treasury bill because you get 4.5%, and it's better than putting your money in the bank. So that's what Bessent has trouble selling, these long-term bonds. And himself and the Fed are going to do whatever is necessary to keep that rate lower. And if you're not going to buy them with your own money, he'll print the money to buy them instead. And that's ultimately what helps bring Bitcoin to 250,000 and on to $1 million by, I think, at least sometime before 2028.
And to that note on liquidity, you also noted that about $612 billion in expected Q1 2025 liquidity. How do you think this drives Bitcoin versus altcoins? Perhaps any altcoin sectors you look at as well?
So obviously Bitcoin dominance is rising. It's about like 64%, something like that right now. I think a lot of people are looking around their altcoin portfolio and they own a lot of dog shit and it hasn't gone up in price. And then they question whether altcoin season is going to happen. But I think there has been an altcoin season because you didn't own it, right? Did you own Hyperliquid? You could have bought it at $3 when it listed. Now it's at $33 or whatever it is. There's been other projects that have done very, very well in this cycle. It's just that if you have a large overhang of venture capital that has to sell once you've listed, your token hasn't done so well. And so I think that cash flow generating projects with real customers who spend real money, and that money makes its way from the protocol to us as the token holders, those very few projects that hit all three of those metrics are going to do very, very well in whatever we call this altcoin season. But I still think that Bitcoin dominance is going to continue to increase until ETH decides that it's going to move again, because literally that's the biggest thing that's going to move that needle lower in terms of Bitcoin dominance.
And on risk management, in another article, The Ugly, on January 27th, 2025, you also mentioned that reducing risk, even selling Bitcoin, and an expected potential drop to 70, 75K territory, I think, back during that time. Well, sort of like, obviously it's a different market, but how has your view maybe evolved since then?
Yeah, so I think we bottomed obviously April 9th, the day when the pivot happened in terms of the 90-day tariff pause. And I know the market's up something like 30 or 40% since that date. I think that we're going to continue rallying into the mid, June, maybe late June period. And then the market's going to start focusing on what happens after the 90-day tariff pause. Does Trump sort of go back to maximalist rhetoric to prove his point that he's serious about changing the dynamics of trade and economic flows for the benefit in his mind to America, which would mean that the rhetoric might shift to, oh yeah, we have this 90-day pause and I'm going to be very, very tough on China and Japan and these other countries, and they're going to have to come to the table and do a new deal. And obviously that's very negative for risk markets. So these deals expire in late July and mid-August, and so I think we could have a period of probably a correction, maybe 20, 30%, something healthy, something to get people shook a bit. And then once we enter into Q3, Q4, the Republican Party needs to prepare for the 2026 election and demonstrate to the American public that they have a good economy, the stock market's doing well, people have jobs. That means money printing.
On the global macro, you mentioned China, you mentioned Bank of Japan. You also highlighted the Bank of Japan's, their recent rate hikes, and also China's policies as crypto drivers. I'm curious, how do you think these international dynamics interact with Trump's pro-crypto stance specifically?
I don't think they really have, they're all kind of the same thing. It's money printing. In Japan's perspective, the BOJ, Bank of Japan, has been saying that they want to normalize rates, raise rates. They're probably the loosest central bank out there versus their inflation target. And the market's not liking that. If you look at the 20-year plus bond maturities and stuff that the BOJ doesn't own, domestic Japanese life insurers are selling these bonds because they're losing money. And so at the end of the day, is the BOJ going to continue to tighten monetary policy? We don't know. We're going to find out in June. They're supposed to start quantitative tightening in June. I don't think they're going to end up doing it. And that'll be a big sea change for the markets, because then you'll fund everything that you want in Japanese yen again, because it's the cheapest currency that's freely tradable for like a hedge fund or a risk-on investor to do so. So I think we could get some more monetary push from Japan. And then China is waiting in the wings. They are obviously stimulating, but they have a massive hole in their property market that's absorbing all this capital that they're printing.
And one more Bitcoin question. Today, GameStop buying $500 million worth of Bitcoin. Any thoughts on that?
Cool, great. Keep buying. I still wouldn't buy the stock, but cool.
All right. We at D3 have been very lucky to be able to work with Arthur and Maelstrom for past couple of years. I'm going to switch the topic a little bit just to other assets, real-world assets. I call them domain assets, obviously. You guys invested in our platform back in the day around digital identity and domains. Can you say maybe what attracted you to this sector and how this domain asset fits in the broader ecosystem?
Obviously, domain assets are tradable. They have been tradable. People have been trading these things. It would be nice to make it a better and more transparent market that's on-chain. And at least I think these are easy things for people to conceptualize bringing into the digital space. I'm not exactly the biggest bull on a lot of other real-world assets, like putting a property on-chain or whatnot, but I think these digital native assets coming and trading on digital blockchains makes fundamental sense.
You also invested, you coined a term I think called DeSci tokens.
I wish, I don't think I coined it.
That's right, you coined the term through some mentions of projects like Bio and Vita. I think in one of your Substacks you emphasized decentralized science, DeSci, tokens like these two Bio and Vita projects. Any parallels you've seen between these type of projects and maybe like domain assets in terms of potential traditional disruption?
You guys probably have a lot more product market fits so far than DeSci does. I think DeSci is an emerging narrative. Maybe we'll see a breakout in another sort of up cycle that people can start aping into these things. But I think at least you guys have a much stronger fundamental case for these assets have been around for decades. They're obviously highly valuable. It obviously would be great to bring liquidity to these things, and a digital blockchain is the best method. It's to be determined whether or not this DeSci movement actually catches on.
All right, well, we've got some quick fire questions and answers too for you, Arthur. Thanks so much. First quick fire one, Arthur, you've been known for bold calls like Bitcoin at 1 million by 2028. For somebody new to crypto at this event, what's one actionable crypto advice you would give newcomers here in this room or at this event?
Unless you are a full-time trader, don't use any leverage.
How many people use leverage over here? Just kidding.
Hey, if you're a full-time trader, do it. Otherwise, just go gamble at the casino. Get better results.
I have one more question for quick fire, and then if you're okay with it, I was maybe like the audience ask a question or two like that. Okay, cool. Besides Bitcoin, what else is Maelstrom's most exciting crypto asset right now, and why?
Most exciting? Probably two. I mean, obviously we own these things. Pendle, which I think is crushing it in the interest rate trading markets, which is obviously the largest trading markets in TradFi, and they're trying to replicate that in a crypto native way on chain with their own solutions. And obviously they have billions of dollars in TVL, been around for a long time. Solid project. It makes money, which is great. Token holders get some of that. And EtherFi, which I call the American Express of crypto. It's helping wealthy crypto people spend their money on-chain and off-chain solutions. And so they just launched a new debit card, which is great. I've used it, just tap and pay and all sorts of stuff. You can spend staked ETH with EtherFi, you can spend stables, and we've seen the token perform very, very well. It's up, I think, something like 3x in the past month as this sort of resurgence in DeFi and cash flow positive projects.
All right, well, thanks for that, Arthur. Quick questions, anybody? We're going to be pretty casual about this. Just raise your hand and I'll run by. All right, excuse me. All right, go ahead and shout out your question.
Speak up.
What I'm asking Arthur, are they just playing a mind game, or is there basically so much OTC Bitcoin out there for actually buying?
You're saying you don't think you're seeing MicroStrategy and those types of companies buying Bitcoin through Coinbase in the...
So basically, they're paying like 70 basis points for the custody, but like I've spoken to investors, nobody knows what MicroStrategy has on their books at any given time. It's basically Coinbase has 10% of the entire BTC stack on their books because they have the cold wallet service, and they are like fully regulated, but they're like smaller entities work in Asia, they work in Dubai, and nobody knows actually any on-chain data on these bank-to-bank transfers. And for us as Bitcoiners, as fans, and this is not supposed how the mission should work out. So we should trust all them that their actual coins move in hands instead of these IOUs and these derivatives markets inside the coin. So this is the black cat. What people ask me about price action in Bitcoin. Are these coins actually move in hands, or this is just a mirage? And I wanted to ask your honest opinion.
I mean, I haven't really looked too deep into it. I might be very surprised if going to tell you, say you own however many hundreds of thousands of Bitcoin and you don't on chain, if you're micro sale or whatnot, and you have all those reporting requirements. Why you're not seeing price action? It's probably because they are buying this sub OTC, and it's just it's a much deeper market than we otherwise would have believed because we're so conditioned to how it was reacting maybe 2 or 3 years past. So I don't really think that's a big risk. I think they probably have all the Bitcoin. Well, I'm not an investor. I don't give a fuck either way. So don't take that as my endorsement of MicroSailor or MicroStrategy. I have no fucking idea.
Well, thank you. Next, we're going to go into the next question.
Hey Arthur, how you doing? By the way, I've followed your story for a long time and respect everything you built. I'm an American citizen. I've been to Bitcoin since 2017. To me, one of the biggest liabilities was always having a U.S. passport to really be effective in this market. And everything you went through, if you were to go back in time or looking into the future, what advice would you give to people in the U.S.? Has the regulatory thing completely changed? Do you still have concerns? And what would you do differently?
So I think a lot of people in the U.S. are very focused on, was it the Genius Act or Market Structure Bill, all these particular bills that supposedly are going to get passed within the next 6 or 24 months, what have you. And I honestly think that obviously all of this comes down to what do the individual voters want, and if individual Bitcoin holders want the Larry Finks and the Brian Armstrong to the world to represent them in these rooms as heads of their own large private companies. That's fine. But I ultimately don't believe that what's good for Coinbase as a centralized corporate is good for everyday Bitcoin and crypto holders. And so I've been on record saying that people should push for bills that basically deregulate the whole thing. There should be no rules other than don't steal and don't commit fraud. Why is there a market structure bill? Just say you don't need a license to do anything. Innovate, develop things on chain, allow anyone around the world, American or not, to come to America, build what they want to build, feel safe building it, and then if it fucks up, it fucks up, right? It's a new industry. It's not as if any of these financial services laws were enacted at the same time in which TradFi finance really came into its own. They were all reactions to things that went wrong. So why not actually legislate things after you actually see some good and bad things, rather than saying, okay, well, the rule was written in the 1930s, we're going to update it a bit so that these 5 companies make a lot of money, but at the end of the day, you still have less consumer choice and less ability to build something. So I think people should focus more on that rather than trying to champion this or that bill that's really just going to be a handoff to a large centralized corporation. But if you're a shareholder, then maybe that's what you want.
Thank you. Next question.
Hey Arthur, what's up? My name is Andres. My question is about real world assets. You kind of touched on it briefly, and that you don't really, I don't want to misquote you here, but you don't really see the use case for a lot of real world assets. What do you see as the use case? Car titles, house titles, I'm guessing maybe yes or no, but what do you see as some of like the really practical things that normies in the real world interact with that will or should at some point be on chain?
Well, I think obviously meme coins then showed us that normies like to trade culture. They understand it. Is this a viral piece of culture that I want to trade, whether it's a song, a meme, a photo, whatever it is, and now you can go on chain and trade those things, and I think that makes a lot of sense. A lot of financial services is probably not going to make it down to the average everyday person. They still don't want to deal with passwords and all those different things you got to deal with when you're in your own financial institution. They just want to buy an ETF in their retirement account, which is completely fine. But if you want to talk about how do you get 1 billion people on chain, well, if their favorite artist is launching some sort of coin, then they'll do it. But they're not going to, figure out how to use a strong password so they can go 5 steps to loop something and make a few extra basis points on their assets.
All right, I think we have time for about one more question. Amber.
I'm seeing a lot of hands, so let's do these two last ones, quick ones.
Great to hear your presentation, Arthur. You said earlier with Maelstrom that digital native assets make a lot of sense for tokenizing. Totally agree. And I'm interested in data and AI specifically. Just wanted to hear your view on blockchain and as a means of curtailing and managing AI, and what your thoughts are on that as a sector generally for blockchain and crypto.
So I would say I think AI entities will use crypto and blockchains. How we make money from that as investors, I have no fucking idea. So there'll be coins that claim to do this, that, and the other thing. Some will be successful, some won't. And over time, we'll figure out what is a successful business model. But sitting here today, I have no idea what that will be.
I'm trying to make the last question good.
Thank you for coming, Arthur. Do you think Bitcoin can hit 200 grand before 2026?
Yes.
Fair enough. My last question. I like that. Do you see Coinbase being in trouble with JP Morgan offering Bitcoin to his, actually selling to clients and stuff? Do you see them being in trouble?
So I'm not obviously.
Coinbase.
I'm not an expert in the Coinbase revenue stream. That if I had to guess, and correct me if I'm wrong, I believe that the majority of the revenue comes from their brokerage operation because they charge something like 1% fees to buy and sell Bitcoin if you're a retail trader. Obviously, that's a very, very large margin, and if you're a JP Morgan or Bank of America, you can charge 0 for that trading, and you have so many other ways to make money from assets within your ecosystem. So I think that the high profit margins that a lot of these, specifically targeting U.S. brokers like Coinbase and Kraken and Gemini are able to charge, that's probably going to go to 0 very, very quickly, and then it's going to be very interesting to see how they're able to innovate and maintain the same cash flows that they were generating before these large banks stepped in and essentially destroyed their profit margins.
Thank you. I think we're going to end things here. I'll give the mic back to you, Fred. I think Arthur's going to stick around, right?
I'll be here not very long, but...
All right, well, thank you, Arthur. This is super helpful.
Cheers.
Cheers.